Hello everyone, welcome back to Upside Down Data. Today I want to talk about Link, its current risk level, and how we might expect it to behave during these relatively bearish times. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So to start us off, I want to show what our risk indicator, the upside downside potential indicator, is making of Link's current price action. So what I'm showing you here is the price history of Link over time on a logarithmic price scale, with each day being a dot color coded to the output of our risk indicator. So 5 is high risk, -5 is low risk. And you can see that throughout Link's history, the UDPI has done a good job of identifying these low and high risk points in Link's history. So one thing that we can look at then is, what does the risk indicator make of this recent price action? And so what we're looking at right now is the long-term UDPI. So this is a risk indicator that cares about moves that play out over months, so months to years. So these kind of market cycle moves, catching these broad moves when there's low risk points and high risk points across those multi-month moves. That's what this version of the UDPI cares about. And what you can see, stands out right away is that we're back actually in the green zone, even with that kind of little pump that Link did before correcting down along with the rest of the crypto market. Even despite that, the model still thinks that Link is pretty low risk right now in the long term. It expects that over the coming months, Link has more realistic upside it could realize than downside. Now, of course, the fate of Link is not entirely its own. There are a lot of macro factors that are kind of circling the crypto markets right now. Fears about inflation, the stock market weakness, things like that, that are dragging down the whole market. That's kind of outside the control of any individual asset. But all else being equal, the model thinks that Link has more upside than downside potential. But of course, keep those macro factors in mind when interpreting that. And we can flip over to look at the raw output of the model across time. So I've just replaced the y-axis here with the UDPI level, see how it plays throughout over time. One thing I think is notable about the UDPI chart for Chainlink is how volatile, in a sense, it is. Or another way of thinking about it is how it likes to play just as much in the top end of the range as the bottom. It spends a lot of the time both realizing its upside potential and then also coming back down and realizing its downside potential. And it's fairly even. This is actually, I think, a remarkable chart in a lot of ways, because you don't see this with a lot of other crypto assets when you apply the UDPI. Most other crypto assets follow a much more bubbly kind of a pattern, where they're hanging out for a long time in low levels of risk before spiking up for a while into these really high levels of risk and then shooting back down to these really low levels of risk in kind of these big boom and bust kind of bubbles, cycles. Whereas Link seems to be a little bit more even keel. There's certainly volatility, but it's not like it's just going one big bubble, one big crash, one big bubble. It's kind of realizing its upside potential throughout a market cycle. And we can see this on the price chart. Throughout this whole time, it's pretty remarkable that in the March 2020 crash, Link didn't even break its uptrend during this time. If you just look at its price action, its uptrend that kind of started all the way back in 2019 actually remained intact through the March 2020 crash, all the way up. And in fact, this more recent downtrend we've seen is the first time Link has done that since all the way back coming out of 2018. Which is pretty remarkable, because most other crypto assets were still quite depressed. A lot of them really bottomed out down here before shooting up into a big bubble with the rest of the crypto market going into late 2020 and early 2021, going then into the summer and crashing. I think it's remarkable that Link has actually been realizing quite a bit of upside potential in times that were otherwise relatively bearish for the rest of the crypto market. I think that is quite interesting. And I'm going to circle back to talking a little bit about maybe some things to think about in terms of how Link might be expected to perform if we're heading into another more bearish period. Not to say that that period is going to be extended. Who knows what's going to happen. But if we were going to continue into a more bearish, prolonged period, might Link act a little bit differently than some other assets? I want to talk about that in a minute. But I do just think it's notable to see this trajectory that Link has been on, and then note how its realization of its upside potential has been actually relatively consistent throughout its life. It doesn't wait for the rest of the market to get hyper bullish before it goes and realizes its upside potential. It can show a lot of strength even in the middle of those times, which I think is notable. So we also have different other versions of our UDPI we can look at. So we have a medium term, which cares about moves that play out over weeks to months. And then our short-term UDPI that cares about moves that play out for over days to weeks. So a much shorter kind of focus. And what you'll see is that especially when you move from the long to the short term, that the short term is just a lot more sensitive to this kind of intra-cycle volatility. It's just really caring about even just these smaller moves. It's updating a lot more quickly in its short-term estimates. You know, how much upside or downside is there over the next days to weeks is what, or this is really trying to capture. Again, long-term, months, medium term, weeks to months. And then the medium term is kind of in between these two, where you'll see it's paying more attention to this volatility, but not as much attention as the short term UDPI does. And we can take a look at just the raw outputs to see where these models currently are across the board. You'll notice that the long-term risk is the lowest of all of them. So probably unsurprisingly, when Link had shot up in that kind of rally right before this more recent correction, these other models were correcting a lot more heavily because, again, they're talking about what's going to happen in the coming weeks or the coming days to weeks. So they care a lot more about that volatility. And so now they're both returning downwards. So essentially in the medium term, the UDPI thinks that there could be more downside potential that's realistic. And then the short term, there's also quite a bit of downside potential that's realistic. But there's kind of more medium and short-term downside that's likely than long-term downside that's likely. Is one way of thinking about this. That kind of in the coming months to years or year for Link, there's quite a bit more upside than downside. A little bit more undecided in the medium and short term. So in the medium term, there's definitely some downside that could be realized. In the short term, there's downside that could be realized. But notably, everything is below zero. So across the board, across all the time frames, the model thinks that there's more realistic upside than downside potential. But it is just notable that the long-term risk is at the lowest right now. There's more indecision in the shorter time frames. And the way I would just see that is that the model is a little bit more agnostic in the shorter term. So in the coming weeks or the coming days to weeks, you know, the model thinks it could go either way quite plausibly. But in the long term, it does seem to have a bit of a bias to think that there's more upside than downside that is realistic. So that's the way I'd interpret this. Of course, not financial advice. You should make your own interpretations, own decisions, but that's just what I'm interpreting from these different model outputs. So one thing I want to talk about as well is another kind of way that we can look at the UDPI that I think is interesting and gives some additional context, additional information. And that is to look at the UDPIs of two different assets against each other. Actually, I just realized I have these backwards. Flip these around. These are wrong. This is supposed the green is the ETH UDPI. The gray is the Link UDPI. I accidentally miscoded those when I was putting in the colors. But this green line is the ETH UDPI. The gray line is the Link UDPI. That's what we're just looking at. What I think is really interesting about these comparisons is that we can look and see when Ethereum was realizing more of its upside potential than Link was at that time, and then also when Link was realizing more of its upside potential than Ethereum. And one other thing I think stands out from this chart is that, again, green being the Ethereum UDPI, you notice that Ethereum kind of followed that boom and bust kind of idea I talked about before. You know, it really corrected heavily off of the 2018 boom. It had a pretty deep correction bear market before popping up again quite explosively into late 2020, early 2021. And it didn't really realize a whole lot of its realistic upside potential in the meantime. Whereas Link during that time had, you know, come off of that peak, that high risk time in 2018. And then Link had been oftentimes realizing a bigger chunk of its realistic upside potential throughout that whole time. And then again in the big bull run, late 2020, early 2021. Now, one thing you might be saying to yourself is, okay, but why don't you just look at the Link Ethereum valuation chart, right? You know, that's the way that most people look at relative performance. They'll just say how many how many ETH is one Link worth? And if you see that going in an uptrend, that just means that Link is outperforming Ethereum. If it's in a downtrend, that means that Ethereum is outperforming Link. And that's the metric most people look at. And I think that does tell you information, but one of the issues I have with that way of assessing relative performance is that it's not calibrating based on realistic upside or downside potential. You have to keep in mind that different crypto assets have different market caps. They have different degrees of plausibility in terms of how far their price could move. You know, Ethereum being a multi-$100 billion asset, it's just not likely for it to be able to do 100x probably ever. You know, to go from like a let's say a $400 billion asset to 100x from there would suddenly become a 40 trillion market cap asset. That's just not going to happen in any near term in crypto. It's just, that's way too large of a market cap. We're not going to see an asset with a market cap that large, maybe ever, but certainly not for a long time. Whereas an asset with a smaller market cap, which was certainly the case for Link back in these earlier days, has a lot more multiples that is realistic for it. It can move a lot higher because it doesn't take as much money to move the price up as it does for an asset that's as large as something like Ethereum. And so I think this gives another perspective where it says, okay, what amount of upside is realistic for that asset, within that asset? And then what we can do is just see, okay, relative to itself, was it performing as highly as it could have been from the model's perspective? And how does that compare to how some other asset was performing, like Link? And what we can see is that Link has just oftentimes been able to outperform itself. You know, it's been able to realize a lot of its upside potential, even during times that are not especially bullish, that are not hyper bullish, that the entire market isn't just going parabolic. And I think that is notable. And so going back to what I mentioned at the beginning about talking about what this might mean for how Link might behave during a more bearish time, well, this might be hopeful. And I think there's some other reasons why this actually makes sense for why Ethereum has behaved this way. Or excuse me, why Link has behaved this way. If you think about Link as a project, it's really a utility in a lot of ways. It's kind of the plumbing of Web3. You know, Chainlink is involved in basically any kind of Web3 application that requires information that exists outside of that other blockchain's wheelhouse, outside of its blockchain or its ecosystem. So anytime in DeFi that they need to pull in information about the price of some other asset that's outside the model, or pull in the price of some real world asset, or just any other kind of outside data it needs to pull in, then you need a data oracle like Chainlink to do that. Now certainly Link is not the only data oracle out there, but Chainlink is by far the most used oracle in the crypto space. It is highly adopted across the crypto space for that purpose. And so if you think about Chainlink, really what it might be doing is kind of tracking broader Web3 adoption. Now, certainly there's going to be volatility in that. So I'm just pulling up the price chart for Link again here. You know, certainly there will be volatility in that whole thing. It's crypto. There's always going to be volatility. But one thing that you might think about with the Link chart is it might just be kind of tracking more broader Web3 adoption. As more of that happens, as more development happens, there's more demand for information from Link. There's more reason for people to start operating nodes for Link. And then that creates demand for the Link token, and so on and so forth. And so one way of thinking about Link potentially is that it is kind of more of this fundamental play, where there's not necessarily going to be a lot of as much speculation around the Link, because there just aren't as many kind of narratives that it fits into. So, you know, it's not a layer 1 protocol, so it couldn't have gotten swept up into that big layer 1 craze we had seen. It's not a meme token. It won't get caught up in any of those crazes that we see. It's not really directly a metaverse token, although certainly you have involvement there with things like NFTs and you know, the metaverse is going to need outside data. Something like Link would be involved. But it's not the forefront of any one of those kind of narrative things. It's kind of in the background powering a lot of those things, but it's not something that's directly kind of talked about. And so it might just go a little bit relatively unnoticed by speculators, where if everyone's just chasing the momentum, Link might not stand out as the next thing to all pile into. Not to say that it can't ever go on runs, you know, certainly it does, but it might just not be as one that's as prone to those kind of speculative laden bubbles. And that might be one reason why we have seen Link, you know, not really be in that kind of as beholden to those broader bubbles that we see in the crypto market, but instead kind of have this steady uptrend that, you know, now it's kind of plateaued, But, assuming Web3 continues to grow, I think it's very reasonable to expect that uptrend to be able to continue again. And so Link, in some ways, might not be a very sexy asset, but it is certainly one that seems to have a lot of fundamental value. And anyone bullish on Web3 as a technology, kind of as maybe a next place where we're going to be moving heavily, then Link makes a whole lot of sense from that perspective. And that might explain a little bit how it's able to kind of outperform the rest of the market in these kind of not especially bullish phases. Because if there just happens to be a lot of new interest, new adoption in the space, that doesn't necessarily catalyze a big bubble, but just is kind of steady growing adoption, then the value of Link should keep on going up. Where for some other tokens it might not yet, because we haven't gotten to that speculative mania phase yet. Now, this is just me all speculating. That's just my opinion. Feel free to disagree, and none of this is financial advice. But for me personally, I do feel like Link is a broad ecosystem play across the crypto space right now. And so I think for me personally, I am bullish on Web3. I do think Web3 is going to turn into something important in the coming years. And so I would fully expect Link to have a share in that when that happens. There's nothing to guarantee that Link has to stay the dominant oracle, but it has so much adoption right now, it would be hard to believe that anything will immediately be able to dethrone it. It's kind of the Ethereum of oracles. There's just nothing that's really close to eclipsing it now. And in fact, it might even be the more, out-ething ETH in that perspective, just because of all the Ethereum competition that's cropped up with layer ones. There just hasn't been the same amount of competition that's really been coming after Chainlink. And so personally, that's how I've been able to that's kind of my outlook. And so even though Link hasn't been all that impressive over the last year or so, it didn't get back to its all-time high coming out of the summer, with Link, if you have a long-term perspective, if you think Web3 is going to grow, personally, I don't see any reason why it shouldn't just keep growing as well. It's something that just seems necessary for Web3 to function. So why would it stagnate or fall when the rest of Web3 might continue to go up? Just my perspective to throw out there. So to wrap up, I just want to note again where the different UDPI stand for Link right now. So what we can see is that in the long term, that's the lowest, negative 2.76. Medium term, negative 0.44. Short term, negative 1.88. And one way to kind of interpret this is that the discrepancy here, or the fact that the medium term, is actually the highest, is that you could say, okay, from the model's perspective, in the coming kind of months to year kind of time range, it pretty clearly thinks that Link has more upside than downside. Not to say that there can't be more downside to be realized during that time, but there's more realistic upside than downside. So it has a bullish bias on that time frame. In the short term, it's also flipping more towards a more bullish standpoint, which is basically it's thinking that in the shorter term, this kind of steep downtrend we've been in is likely to have some relief, at least in the short term. That it's unlikely for that to just keep on going at that same rate in the short term. That it's probably going to find some kind of a bottom point before too terribly long is its perspective. Although certainly there's more downside that could happen before that occurs. But then the medium term, that's where it's a little bit more unexpected. So if it were to form some kind of a shorter term bottom, that doesn't mean that in the coming weeks after that, there couldn't be some more downside potential that could show up and then get realized. So that's one way of thinking about this. In the medium term, quite undecided. Possible, it's leaning towards some shorter term relief materializing at some point. And then in the long term, it does have a bullish bias. But again, you need to interpret all of this in the macro context. If something were to happen with the Fed, for example, if they were to say something extremely hawkish that would freak out investors across the kind of entire equity market, and the equities markets were to collapse, crypto is going to fall right along with them, and then Link would as well, in my opinion. I don't think anything's really going to be spared if we have a massive crash in the equities market. So you just have to keep those things in mind. This is what the model thinks about Link in terms of what Link has been doing. But, the model isn't paying attention to the Fed. The model doesn't know about those kind of macro uncertainties that could come in and destroy things beyond what's already been priced into the market. So just something that you have to keep in mind with the outputs of these models in terms of the interpretation. But assuming that we don't get a total equities crash, these are the numbers that it's saying, and that's my current interpretation of what the model is telling us. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with the UDPI, we're all going to make it.